Now guys, let me tell you that what all I am going to discuss in this S&P 500 weekly technical analysis. So this is the agenda of this S&P 500 technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. It is actually the weekly chart which is helping the market, the S&P 500, Nasdaq, Dow Jones, to sustain and to fight for its survival in the bull side. Without the support of the weekly chart, definitely there would have been a heavy fall, not just for one day but continuously. Okay, just like what we have seen in the Dow Jones for 9 or 10 days, there were red candles. Okay, so weekly chart market is still sustaining bullish, that trend is still bullish. Okay, that is why there is some suspicion whether this fall will actually convert into the correction, or was it just a normal fall, or was it just an opportunity to enter into the market and then the market will go long, means it will go bullish. So I will show you through the weekly candles, the weekly chart, what exactly is happening. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Now daily chart, as you can see, very big candles. Okay, especially on Wednesday there was a very heavy this red candle. Now the importance of this heavy red candle is that any bullish movement in the S&P 500 will be limited to the high of this candle. Third and the last point of the agenda is the probable movement of the SP500 from December 23rd to December 27th. So probable movement means what is going to happen, what kind of flow we are expecting, in the market. Okay, first fall then bullish, or first bullish and then fall. What kind of the flow we are expecting in the market. And guys, one more thing, all of these three sections are interrelated, are interconnected. So when I say the probable movement, or when I come to the point number 3 to discuss the probable movement, then by that time I have already discussed around 30% of the probable movement in the first and the second point of the agenda, because I discussed the candles in the first and the second part, along with the candles the patterns. Okay, so that is the reason around 30 or more than 30% probable movement I cover in the first and the second part. Okay, now so before I discuss the weekly chart, let me tell you that generally what happens. Okay, the next week 25th, okay, holiday, and around 25th, okay, there will be a short day, only 3 or 4 hours of trading. Okay, I think it will be on 26th. Okay, so this means that the next week is a short week, only 3.5 days. Okay, so generally what happens in this kind of scenario is that the market, rather than going bearish, it goes bullish, and it is actually non-technical, it has no technical relevance. Okay, but I will discuss more in the second and the third point. Okay, about this the 3.5 days, okay, the bullish movement. Okay, and what are the chances for this the bullish movement. Now guys, this is the weekly chart. W as in weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. So now if you notice the movement, then the movement says that there was a normal fall in the market, and this was not the fall which we can say, okay, that can actually trigger the correction. Okay, so you can simply look into the historical movement. Okay, in the same bullish trend. Okay, historical movement, there were chances for the correction around here. This was August. Okay, in the first week of August there were chances, but after first week of August, it is just whatever we have seen. Okay, this heavy red candle, these two candles, this candle. Okay, this is just a normal fall. Okay, so now let's first analyze the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500, Dow Jones every day from Monday through Friday, and you want to trade with confidence, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now the candle. Now if you notice this, the last candle, okay, it's a good or a heavy bearish candle. There is no defined shape of the candle. But because the candle is heavy, That is why there are still bearish sentiments in the market. The impact of these bearish sentiments may not be felt heavily on Monday, because on Friday there was a bullish retrace, a heavy bullish retrace, more than 1%. Okay. However, definitely Monday, Tuesday or so, okay, some weakness, some pressure will be felt on the market. Especially the closing was 5935, sorry, 5930.85. This was the closing. Okay, so this closing is very significant because this closing is below my resistance level. Okay, that is why for any more bullish movement to happen, S&P 500 must recover, must sustain above my resistance level, and once that happens, then only it will allow to move up. However, if it struggles and fails at this the resistance level, then definitely there won't be much choice, but it will have to come down. Come down to what level, that I will discuss on the daily chart and in the probable movement. So through this candle it is clear that there are bearish sentiments in the market. Okay, but the market is not at the point from where we can say that it is going to collapse. Okay, and this can clearly be seen, okay, through this the movement. Okay, now the weekly candle of the Dow Jones. So the real problem is here, okay, in the Dow Jones. The real problem is again the same, okay, bullish trend, okay, and now this. So back to back 1 2 3, okay, 3 red candles. The last candle is a heavy red candle. Friday there was a recovery, a good recovery, more than 1%, but because of these continuous red candles, okay, Dow Jones is weak. It is not very weak, okay, and Dow Jones is not in a condition to trigger any heavy fall or correction. No, it is simply weak in a manner that the Dow Jones is going to face some struggle when it try to move up. Okay, and when the Dow Jones struggles to move up, then S&P 500 will be impacted, the Nasdaq will be impacted. Okay, and now see one more thing that you must understand, okay, why I'm saying that Dow Jones is more weak as compared to the S&P 500. If you notice, S&P 500 managed to close above this the red moving average. Okay, and historically also we have seen that whenever the market closed below the red moving average, there was more fall. Okay, or at least on Monday there was, you know, this some bearish movement. Okay, but when it's managed to sustain and managed to close above the red moving average, then everything was good and well. In this case also everything is good and well because it managed to recover and close above the red moving average. Whereas in case of the Dow Jones, okay, you will find almost the similar pattern, similar thing here. Okay, but now this time the Dow Jones, and remember I'm talking about the bullish trend. This is the bullish trend. Okay, earlier there was kind of some consolidation from March to May. Okay, but now it is in the bullish trend. In the bullish trend we have seen, okay, this kind of situation, and then once it lost, okay, then this. So now the thing is that the Dow Jones has lost this the red moving average, and however somehow it managed to sustain above the blue moving average. Okay, otherwise the situation would have been entirely different, and with confidence I would have said that 100% there will be a gap down open on Monday. Okay, but now because it has closed above this the moving average, okay, the blue moving average. Okay, so I will not say that there is or there will be a gap down open. Okay, anyways, yes, so gap down open or gap up open is not confirmed. Okay, neither through this last candle of the Dow Jones nor through the last candle of the S&P 500. There is some weakness, and this will be there definitely. Okay, it will be felt on Monday too. Some weakness like intraday it can fall, or initially after open, okay, it comes down and then it recovers. That kind of weakness, okay, it will be there. Now let's talk about the technicals. In terms of the technicals, clear fan out in the moving average is no problem as such, bullish. Okay, but because it has now closed into the cluster of the moving averages, so it is bullish and neutral. See, there is no bearishness, absolutely no bearishness. It is either neutral or bullish through the moving averages. Bollinger Bands bullish, Ichimoku cloud bullish. Now the most important and most significant, okay, this is what will decide the near future of the market. If you notice, October 28th, okay, it came down. It was at the junction to give a bearish crossover, and I'm talking about the MACD, moving average convergence divergence. Okay, the week of October 28th, it was at the junction to give a bearish crossover. However, in the first week of November, that was the week of November 4th, okay, elections, the results, everything was there, very heavy bullish movement. And because of this exceptionally heavy bullish movement, we have seen that the S&P 500, the MACD of the S&P 500 never gave the bearish crossover, rather it moved up from here. Since then it is moving up. Now once again it has come to the same point, exactly the same point. So when I say the same point, I mean, if there comes, only and only if there comes a good or a heavy bullish candle, then only there will be, okay, then only there will not be any bearish crossover. Okay, and if there comes a heavy bullish candle and there comes no bearish crossover, then we can expect that at least until January 2025, market is expected to remain bullish. And this is through the technicals. Okay, I'm not speculating anything, I'm showing you why I am saying that until January, because it will then it will take around, minimum 2 to 3 weeks, 2 or 3 weeks. Okay, if there comes back to back fall, then it requires minimum 2 or 3 weeks so that it can again come into this kind of condition. Okay, so that is why I'm saying this. Other than heavy bullish candle, any kind of candle, green candle, red candle, okay, any kind of candle which is not heavily bullish, I'm saying heavily bullish, only and only a heavily bullish candle can save the market. Otherwise nothing will. And once there's the bearish crossover in the MACD of the S&P 500 on the weekly chart, then what will happen? Then this will mark the bearishness. Okay, see, stochastic RSI, it is already bearish. Once the MACD goes bearish, and if you have subscribed to my YouTube channel for last many months or years, so when both of these when both of these technicals are bearish, then the trend, or not trend, then the movement is bearish or the bearish pressure. And when both of these are bullish, then bullish. Okay, that momentum, or okay, that support it gets. That is why next week will be very crucial, and we should be very careful, because if there comes a bearish crossover, then the condition will be there to sell, not to go long but to go short. Means sell on the highs, because eventually it will come down, eventually it will fail. So now it is very much clear that MACD of the S&P 500 is at the junction, okay, from where the picture can really change. So other than this, everything looks good. So now, considering all of these factors and everything, S&P 500 will be seen or considered as 80% bullish. 80% bullish on the weekly chart, and weekly chart means the trend setter. Okay, so as of now the trend is bullish. Okay, if there comes the bearish crossover in the MACD next week, then we will focus only on the MACD and not the movement. There may come some green candle 1 or 2 weeks, but eventually it will come down, so it will fall for sure. Okay, this is there, it is 80% bullish. Now Dow Jones, in case of the Dow Jones, clear fan out, but again, so the moving averages will not be considered as bullish, moving averages will be considered as neutral. Okay, neither bullish nor bearish, moving averages are simply neutral. Bollinger Bands, we will say bullish. Okay, Bollinger Bands are bullish, Ichimoku cloud is bullish. And now So the problem has actually started to happen. Okay, you can see here Dow Jones, MACD of the Dow Jones has given a confirmed bearish crossover. Okay, and stochastic RSI is already bearish. So this means that now there are uh, means chances, but chances are thin, chances are less. Only and only if there comes like 3%, 4%, 4%, 3 to 4% bullish movement, okay, by the end of the next week, then it may change. Means, see, it there is a bearish crossover, it will not change. Okay, if there comes 3 to 4% heavy bullish movement, then S&P 500 will be able to save itself. There will not be any bearish crossover. Dow Jones, okay, this will continue, but in the next week, that will be in the last week of December. Okay, last week of December and first week of January, if and this bullish movement continues, then Dow Jones will be in a position to recover from here. Okay, otherwise not. This means around 5%, 5 to 6% movement is needed. Okay, heavy movement, heavy bullish movement is needed. So in case of the Dow Jones, so Dow Jones will be simply considered as 50-50, and now Dow Jones has come into the neutral trend. Neutral. Okay, it is neither bullish nor bearish, but the good thing is that although it is neutral, but it is in the bull side. Okay, this is the bullish side, bull side. So now guys, before I discuss the daily chart, I have this important information to share with you, that these are the products or these are the programs that I offer. Okay, and the most important part of the program is the hacks. These are so this program is 8 hacks plus modified technical indicators. When I say the hacks, okay, the hacks works almost 100% of the times with almost 100% accuracy. Okay, and these hacks works instantly. It's not like that you need to wait for a week, a month, okay, to see the effect, but it will work instantly. Means you can predict whether there will be a gap up open, gap down open, whether there will be a green candle or a red candle, whether there will be 3% fall, 5% fall, or it will simply remain, okay, range bound in a very narrow range and it will not go anywhere. Okay, so all of these are hacks. Then the modified technical indicators, I am using modified technical indicators, that is why I am able to predict the movement even before it is seen in the market. Okay, this is the options trading strategies and the premium calculator. Through this, the premium calculator, you can calculate the premium value of any option, of any strike, okay, within 30 seconds. Okay, and this program is actually the combination of these two. Okay, these two programs. So guys, if you want to learn more, then you can open these the programs, okay, and you will find all of the information there. And I've given the link to these programs in the description of the video and also in the comment section. And when you follow the link, then you will visit my Patreon page, and here you will find the shop section. In the shop section, you will find all of these the programs. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. Now here I will give you the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day. Okay, not 1 week or 1 hour. Now first comes the candle. Now if you notice, this is the last candle. It's a heavy bullish candle. Okay, this bullish candle failed. It failed what? This bullish candle failed to give an absolute engulfing. Okay, because the high of the previous candle was 5935.52. 5935. This candle closed at 5930. Okay, if this candle would have closed above 5935 or above 5936, then definitely there would have been an absolute bullish engulfing. Absolute bullish engulfing means that then for the next week there would have been more than 70 or 80% chances that the next weekly candle would have been a bullish candle. Anyways, this was just one part. Now the good thing is that the open of the candle, okay, was below these the closing of these two candles, but the closing of the candle is above the closing and the open price of the previous candle, indicating bullish sentiments. Also closing is above the closing price of the last to last candle, again bullish sentiments. Okay, this candle does not confirm any gap up open, no gap up open. Okay, means, see, there may or may not come a gap up open, but I am not confirming that 100% there will be a gap up open, because generally when there are these scenarios, then with confidence, okay, I say that there will be a gap up open or gap down open, and that is generally seen especially on Monday. But now this time not. Okay, no gap up open or gap down open. This candle simply confirms, simply indicates the continuation of the bullish movement or the bullish sentiment, at least on Monday. Okay, this candle does not have that the heavy bullish power which can be, okay, through which we can say, okay, that there will be very heavy bullish movement. Rather, it simply has the power to help the market sustain bullish and not to fall. Okay, but again, that will be, that will be conditional, because of the resistance level is there and the closing is below the resistance level. Okay, only once it comes over the resistance level, then only we can say, okay, now the market is actually safe. Okay, and any fall will be limited to this the resistance level, which will then act as support level. Okay, so no gap up, okay, neither gap up nor gap down. Okay, it is not confirmed, only the bullish sentiments. Okay, these will be carried forward to Monday. Okay, and if all goes well on Monday, there comes a bullish movement, bullish candle, then definitely on Tuesday also. Now the daily candle of the Dow Jones. This is the Dow Jones. Now in case of the Dow Jones, again almost a similar kind of condition, but the best part here is the absolute engulfing is seen. Absolute engulfing, because if you notice the open, this particular candle which was there on 19th of December, this particular candle of 19th of December is absolutely consumed by the last candle which was seen or which was formed on Friday. Okay, absolutely in between the open and the closing prices. So absolute engulfing is there. But because there was an intraday retrace and it closed inside the Ichimoku cloud, that is why again no gap up, no gap down. Okay, but this candle is more bullish as compared to the candle in the S&P 500. Okay, this means that irrespective of anything, on Monday we can expect bullish movement. Okay, continuation of the bullish movement, or if there will be any fall, then that fall will be limited. In case of the Dow Jones will try to not to lose the Ichimoku cloud, because if you have some technical knowledge, then the boundary of the Ichimoku cloud itself act as the support and resistance level. Whatever happens inside the cloud, okay, it is an illusion in a manner that we might think it is bullish and then all of a sudden there will be a fall. We might think that it is losing, it is coming down, then all of a sudden there will be a bullish movement. Okay, so this is one of the this unique characteristics of the cloud. Okay, so this is the best thing in the Dow Jones, that Dow Jones is more bullish, okay, through the daily chart as compared to the S&P 500. Now although I am saying that it was bullish, means the Friday is more bullish as compared to the the Friday candle of the S&P 500, but if you notice, it was actually the S&P 500 which was consolidating until 2 p.m. Eastern time on Wednesday, on 18th of December. So I predicted that on December 16th itself, okay, when it was clearly seen that the Dow Jones was bearish, S&P 500 was holding, consolidating, and Nasdaq was bullish. So it was very much clear that all of this, Dow Jones will remain bearish until December 18th and 2 p.m. Okay, S&P 500 will hold, will consolidate until 2 p.m. Eastern Time on December 18th. Nasdaq will remain bullish until 2 p.m. Eastern Time on December 18th. And exactly the same was seen until 2 p.m. Eastern Time on December 18th. The S&P 500 was holding, and when the SEPs were released and the notes were released, then only there was a heavy, very heavy fall. And that heavy fall was because of the FOMC decision and the SEPs. That is why in this update to my Patreon community members, I mentioned very, very clearly that overall today's SEPs are neutral, with only negative point being the fewer than expected rate cuts. And in my continuous interpretation to my Patreon community members during the press conference of the Fed chairman, okay, I've again and again mentioned hawkish. Okay, his tone, his behavior, and whatever he had mentioned, okay, it was hawkish. Okay, and only 2 rate cuts making the market spooky, because this indicates a correction as the best case scenario. Okay, although no one is talking about the recession, okay, but for now correction or a good correction in the market, 25 to 30% correction. So that is why we have seen this, the very heavy fall, and then the next day the impact of this candle, this fall was seen. Initially it tried to move up and then failed and closed at red. On Friday, S&P 500 would have saved itself, okay, if it would have sustained above my heavy resistance zone. So in the midday update on Thursday, on December 19th, it was very much clear that the S&P 500 failed to sustain at this the heavy resistance zone, which was supposed to bring back the S&P 500 into the bullish side. And now that it has failed at the resistance zone, this means that for the rest of the day, for the entire day, it is not expected to move beyond the zone. Whenever it comes to the zone, then again and again it will struggle. Now question is that if the bullish side was captured, okay, that in the bull side, this is the limit, it has already failed at the zone. This means that it is restricted to the zone. The bull side is restricted. What about the bearish side? In the same update, I mentioned this heavy support zone is strong enough to hold any fall in the S&P 500 in the second half or for rest of the day. If the S&P 500 loses to this zone, means if it comes down, then definitely this zone will handle the fall. And as expected and predicted, the fall was handled by the zone. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. Now here I will give you the probable movement of the S&P 500, Dow Jones, and in a manner to the entire stock market, okay, from Monday through Friday, December 23rd to December 27th. Now there are some very, very important things for next 2 weeks. For next 2 weeks there is no data, nothing. This means that for the next 2 weeks, in the absence of data or so, the market will trade through the technicals, levels, okay, zones, support, resistance, okay, these things only. So if nothing is there, this means that everything is good and the market should remain bullish. Yes, well, non-technically, okay, it should remain bullish, okay, because there is this kind of condition that there is no data, nothing. But the problem is the Dow Jones. S&P 500, there is no problem in the S&P 500, okay, because there is no proper crossover in the moving averages, okay, and it is also trading and sustaining and closing above the Ichimoku cloud, so there is no problem. And also on the weekly chart we have seen it is 80% bullish, okay. And yes, the only problem is the MACD on the weekly chart, because if there comes a heavy bullish candle the next week, then only, okay, we can expect the MACD to not to give a bearish crossover. Otherwise it will give a bearish crossover, okay. So S&P 500 is more bullish or heavily bullish, and then the Nasdaq is more bullish as compared to the S&P 500. Dow Jones is least bullish or is kind of bearish. Why? There is a confirmed crossover in the moving averages. It is sustaining in the cloud itself. It has not closed above the cloud. If it would have closed above the Ichimoku cloud, then definitely there would have been some bullish relief. Bullish relief means that now it has sustained above the cloud in the bull side, it is going to sustain further. Okay, it can go bullish, but it is sustaining inside the cloud. It is bullish, sustaining inside the cloud. Okay, and cloud is what? Cloud is just an illusion. Okay, we do not know whether the Dow Jones will come out this way or this way. Okay, and you can back test it. Okay, if you have some technical knowledge, you can try. Okay, you can check the behavior of the cloud. Okay, especially okay in this condition, and also the boundary of the Ichimoku cloud itself act as the support and resistance level. This means that as long as Dow Jones is sustaining in the cloud, fine, no problem, no problem. S&P 500 Nasdaq can sustain. Okay, the day when Dow Jones gives first closing below the cloud will be the day when we will say, okay, now there are very heavy chances that market is now going to change into the bearish. When there comes second closing, then it is confirmed. Means there will be two consecutive closings. Okay, then it will be very much confirmed. Okay, that now it is not going anymore bullish, it is going bearish, and then there will be bearish movement, fall, and this will then force the weekly chart of the Dow Jones to go for more fall. Okay, and then slowly the trend will change from bullish to bearish. Okay, although this the change in the trend, okay, it might take up to 1 month. Okay, but through the daily chart the trend will change early. Now the trend has already changed on the daily chart. Okay, the only thing that we are waiting for is the two consecutive closings below the Ichimoku cloud, and then it will be bearish. It will enter into the bearish trend. Okay, remember I'm talking about the daily chart, I'm not saying the weekly chart. Okay, the long term trend is still bullish, it will remain bullish, there will be no change in the long term trend. This fall or this change in the trend will be the short term. Long term it is bullish long term, and then slowly, okay, after some time there is fall, short term bearish trend, bullish, short term bearish trend, bullish, short term bearish trend, this kind of movement I'm talking about. Okay, but when the problem happens when this short term, okay, trend becomes so heavy that it actually changes the long term trend, and when the long term trend changes to the bearish side, then there will be the correction. Okay, this correction may or may not convert into the recession. Okay, very simple. So now this means that for the market, when I say the market, now here I mean the entire market, the entire US stock market, for the market to remain bullish, the Dow Jones somehow it must clear, must sustain, and must trade above the Ichimoku cloud. Okay, so that there will be no confusion, it will remain bullish, and then entire market will remain bullish. S&P 500 for now, the heavy resistance or the any bullish movement in the S&P 500 will be limited to the high of this candle, that was 6070. Only and only when there comes a breach and a closing above this 6070, there will be a very heavy probability that S&P 500 will go and will try to retest its all-time high, that is 6100. It will retest. Okay, and once there comes a breach, I'm not saying closing, I'm saying once there comes a breach of 6100, then definitely the S&P 500 will move towards its expected all-time high of the season. Okay, so these are the conditions for now. Okay, this, but before it can try to go for 6070, the S&P 500 will be struggling to clear the psychological mark 6000. 6000 is the psychological mark. Okay, only when there comes a closing, above 6000, the S&P 500 will come into a condition to try for 6070 and then 6100 or beyond. However, if the S&P 500 moves up but fails to close above 6000, okay, in that case, what will happen? In that case, this will simply clear that now the S&P 500 doesn't have that much of potential, okay, or the market participants are not that much bullish, so they are not going long, they are not buying. Because yesterday, if you notice, although there was very heavy bullish movement, and if you notice the volume was not which was supposed to be, okay, so very heavy bullish movement but normal volume, okay, so this doesn't add up. If there would have been a very heavy volume and then this heavy bullish movement, then yes, it is acceptable that market participants, okay, they want to go bullish. But now the volume was normal just like every day, but the movement was heavy, okay. This means that it is just like people, they are trying to test, okay, if there are any chances that it can recover, it can, regain its bullish trend or not. Simple, okay. But we will not follow the sentiments or the speculation, okay. For us, okay, numbers are the most important. 6,000, okay, before 6,000 there is very heavy resistance, okay, resistance zone, okay, this resistance, so it must clear and sustain above the resistance so that it can actually try for 6,000. If not, if it remains below 6,000, then it is done. It will then take a U-turn, okay. During the U-turn, it will first have to clear this heavy support level, okay, because it is going to find the support. See, again, before that also I mentioned that whenever the movement is seen, whenever the S&P 500 comes to the level, the zone, this was also the confluence zone, the consolidation zone earlier, it will find heavy support irrespective of anything, okay, and it is also my calculated heavy support level, okay. So any fall will be limited to this support, that is in 5.8xx. Very simple, okay. Problem will happen, or problem will start to happen in the bearish side, okay. Now I'm talking about the bearish side. It will start to happen when the Dow Jones loses and gives two closings below the Ichimoku cloud, whether it gives the closing here or here or here, whenever it gives these closings, okay. And also at the same time, what if the Dow Jones is not in that condition, but if technically, if the S&P 500 loses, okay, and gives two closings below this heavy support zone, in that case it is done. In that case, this bullish portion, it is now out of the picture, okay. Then there will be fall, and then we will talk about the bearish movement, okay. Then we will talk about the short selling, okay, and those things. So now the market has 2 weeks. 2 weeks means last week of December and the first week of January. These are the only 2 weeks the market have. If the market fails to make good use means there must come 2 good bullish candles in these 2 weeks. If there doesn't come the 2 good bullish candles, then be ready for the correction around 25% fall or 30% fall. 25-30 means it will be somewhere in the 4,500 or so, okay, or around 4,000 to 4,500 or so. And yes, let me clear one more thing, that some people are saying that by the end of year 2025, S&P 500 will be around 7,000. Okay, so how this is going to work? This can work. I'm not denying the fact that it cannot work. It can work. So how it will? So how it can work? This can work if in the first 3 to 5 months, okay, or until April, May, or in the first half until maximum June, okay, the S&P 500 completes its bearish cycle. It comes down, enters into the correction, fulfills the conditions of the correction, okay, that fall 25-30% fall, and then by May or June, okay, it recovers and it is trading around 5,000, okay, or just above 5,000, 5,100 or around 5,000, okay, in June or so. If it will be in that condition, okay, then we can say that yes, now the S&P 500 can try for 7,000 by the end of year 2025, because once the correction cycle is complete, then what will happen? Then there will be only bullish movement for next few years, okay, before we can see any correction. The problem will happen only if there comes a recession, okay, because if the recession strikes, then there will not be any 7,000 for next 2 or 3 years, okay, three years we can say, because then entire 2025 will be consumed by the recession, okay. During recession, S&P 500 will be somewhere around 3,500 or 4,000, okay, um, 3,500, around 3,500, because during the recession market falls by 50%, 40 to 50%. As of now, it is S&P 500 is 5,900, so somewhere around 3,000, in between 3,000 and 3,500 you can say, okay. So first it will come down, okay, it will spend many weeks, many months, then it will recover. So this recession cycle will be time consuming. It will consume the entire 2025 and then moving, okay, so it will take around 3 years to reach to 7,000, okay. So now it is clear that the problem will happen, or problem will start to happen, when there comes 2 consecutive closings this side, because earlier if this would have been the case, then we were not worried because there was heavy strong 100% absolute bullish trend, but now it has come to this the level because there is already a bearish crossover in the moving averages. So yes, I can say that there is one relief. What is that relief? That relief is in the MACD itself, okay. What kind of relief? If you notice, divergence in the MACD is heavy, okay. This heavy divergence in the MACD is generally not allowed. Whenever the MACD comes into this heavy divergence, sorry, I'm not saying that Dow Jones or S&P 500, I'm saying MACD in general, whether it happens for an index, for any crypto, for any stock, okay. Generally I do not consider the crypto, so or anything, okay. Whenever this heavy divergence is seen, then the particular index or the stock or the commodity correct itself, okay, and then there comes heavy bullish movement. So similarly, there is a very heavy divergence in the MACD. This one good bullish candle is the first indication that the market, the index is trying to heal, itself, okay, and it can further heal because the divergence is still heavy. So if there comes next 2 or 3 days continuous bullish candles, heavy bullish movement, then also that is technically allowed, and I've given you the reason, because of this heavy divergence in the MACD. And if you notice, I think it is not there in the S&P 500. No, it is also there in the S&P 500. So this heavy divergence is not allowed. This was heavy divergence, it moved up. This was heavy divergence, it came down. This is heavy divergence, it is moving up, okay. So this has brought one more thing, okay, into the picture, and that is that on Monday and Tuesday, okay, market will be in a condition, okay. When I say market, I mean all of the indices, because this heavy divergence is not just in S&P 500 on the Dow Jones, it is in all of these indices, okay. So the market is in a condition that on Monday and Tuesday we can see, or we can expect bullish candles, bullish movement, okay. If through these bullish candles, through these bullish movements, the Dow Jones and the S&P 500, Nasdaq, especially I'm talking about the Dow Jones, because Dow Jones is at the critical this junction, critical level, okay, bullish or bearish. So if the Dow Jones is able to recover and to give closings above the Ichimoku cloud, then this will bring relief, a heavy relief to the market, because in that case S&P 500 will also be trading above the moving averages, will be able to regain, and 6070, then 6100, okay. But if, remember, if Monday and Tuesday only, if there comes very limited candles in the Dow Jones, okay, it fails to give good bullish candles on Monday and Tuesday, then what will happen? Through these limited candles, the divergence of the MACD, okay, you will see that now it is coming into the balance. Now it is balanced. Once it is balanced, then there is nothing else to help, okay. In that case it will have to give up. So Monday and Tuesday will be very crucial, okay, for the entire market, because Monday and Tuesday will decide or will define the near future, or for at least for next 2 weeks, whether it will remain bullish or not. And also you can say like for January, okay, 2025, okay, what we can expect. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500 if you are my Patreon community member. If you are not, then you can join my Patreon community in order to understand what is happening in the market on the daily basis. S&P 500, Dow Jones, why it is bullish, why it is bearish, whether there will be a real fall, whether there will be a bullish movement, what will be the resistance level, what will be the support level, whether there will be consolidation, each and everything in a very precise manner that can result in this kind of scenario. And if you are not my Patreon community member, then you can join my Patreon community, and I've given the link in the description of the video and also in the comment section. But guys, if you want to trade by yourself with confidence and you want to learn the hacks and the options and the trading strategies, the technical indicators, then you can participate in the programs. So these hacks works almost 100% of the time with almost 100% accuracy. Okay, so I have given the link in the description of the video and also in the comment section. When you follow that link, then you will visit my Patreon page, and here you will see the shop section. In the shop section, you will find all of the programs. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then you can ask your questions through the comment section. So guys, this was my S&P 500 technical analysis for the week of December 23rd, means from December 23rd, which is Monday, to December 27th, that will be Friday.